When you ask people about the price of housing,
Redunculous.
is the resounding answer.
We even do not dream.
Way beyond the average poor young families now.
But this year, economists with Canada's Mortgage Housing Corporation are expecting the housing market to heat up in BC due to low mortgage rates and slower population growth. Housing starts are also expected to grow over 2025. And as a result, people are expected to shift around, increasing rental vacancies gradually.
As a result, what we are expecting to see is that gap between the vacant versus those occupied units lower, and then gradually result in more affordability.
And how gradual are we talking?
It's a great question, and I hope that we had a crystal ball in that sense. We still expect to see that rents are growing, however, with a slower pace.
Housing advocates say waiting isn't the right answer.
We've been told by the development industry for decades now that new builds and new units will lead to a decrease in rent, and it just hasn't happened. In our opinion, rent control isn't something that can wait.
BC's housing minister says it's a no-go, saying in 2018 a task force found that it would have unintended consequences of reducing affordable rental stock. But with the trade war lurking, TAPS argues the new builds and resulting lower rent rates aren't a given.
They need certainty that their rent is not going to increase, and that's not something the provincial government has provided.
TAPS says rent rates should be tied to the unit so rent can't be jacked up in between tenants. They also say the NDP's capital expenditure rent increase program that allows landlords to charge tenants for major capital expenses has huge gaps in regulation at renters' expense.
It's the mega landlords, it's the real estate investment trusts. The richest of the rich landlords are the ones who are getting the rent increases. So to us, the system is broken.
Broken, or heading towards a more balanced market. At this point, something only time will tell.